All right, so I've entered in on a trade. So I just entered in on Euro AUD, and I'm in right now 16 lots, currently running about 1300. And I almost made the same mistake as last time where I forgot to record the entry, but this time I'm gonna actually get this full trade from start to finish. So I just entered in about like what, an hour and a half ago, 2 hours. It was around 11 a.m. when I entered, a little bit later in the New York session. But one thing I found is with swing trading, it doesn't really matter too much when you enter, it just matters where you enter. And what I mean by that is in the market structure. So what I'm expecting it to do is kind of like form this bearish structure like this. And basically my prediction is that where I just entered in right here is this point in the market structure. Because if it is this point, then it's going to continue to go down. And that means that this will go down beneath this little area of support right around 177,300. So it's already going in profit, which is what I like to see in all of my trades. I need my trades to go most of the time straight into profit. There's one reason for that, because if I'm entering in at the top right there of that drawing, then it's supposed to go down. So I'm in right now, just went up to $1,800 in profit. Hopefully you guys can see that. I'm in 16.5 lots. Someone asked me the other day, how do you calculate your lot size? Because I guess they saw that my lot sizes are always different. That's because I go on my FX book, position size calculator, and I calculate it there. So it's all based off of how much money and how much risk I want to put behind the specific trade. It's very, very simple. So why did I just enter in on this trade? So that way I could also use this as like my own journal. I could also go back and see what I was thinking when I entered and then what actually ended up happening. And I'm going to post this, whether it's a win, whether it's a loss. I have no idea what's going to happen from now. But Euro AUD has been consistently going down on the daily time frame. We made down this huge move of hundreds and hundreds of pips down to 176. So we went from 181 to 176. We bounced off of that strong psychological level. And then we basically pulled back about 50%, which I do like to look at Fibonacci retracements. I don't necessarily place the Fibonacci, but I'm always thinking, how much has the market retraced? If it hasn't retraced 50%, then you have a high chance of getting that retracement and losing your position. So the fact that we've already retraced 50% of this big leg down on the daily is a pretty good sign. So if we go into the 4-hour time frame, this is where you can basically start marking off your market structure. So you have up here a high, a lower high, and another lower high. So what am I anticipating? That this right here is the next lower high, or it is the next lower high, but the point is, will this trend continue based off of all of these lows and lower highs in the market? It's telling me that it should continue, and this should be a winning trade to the downside. So let's see what actually happens. I mean, there's not really much else to talk about right now, other than the fact of why did I enter in? I entered in because I saw a strong reaction off of this zone, and I saw multiple rejection wicks right here, leading me to feel confident in entering in. And I also know that on the 2-hour time frame, we're using this 50 moving average as a dynamic form of resistance. So I like seeing that it's being used as a resistance. Also on the 4-hour time frame, we did tap into the 50 EMA. So that's a very good sign that the market is ready to go down, and it's going to reject somewhere around 177,900 and continue to the downside. So my target for this trade down here is 176,700. I do think it is a very logical place to have my take profit, because I actually see the market going down further, at least to 176,500. I do think we're going to bounce off of the 500 area and possibly then continue down towards the 176 round psychological level. So let's go ahead and see. Right now we are using the 178 psychological level in our favor. So if you guys know about my trading, I love using these areas because they're areas that are commonly used for either buying or selling. So if right now, after it has been used for buying in the past, right now we're using it as a resistance, then the probability of us actually using this zone right now to go down is very high. And if you look at the risk to reward on this trade, it's 2.4. So even if I'm wrong, right? Even if the probability is 50-50 and I'm wrong, I would have made more than double my risk if this does play out. That's why I like taking trades like these at an important key level based off of the market structure and based off of where the market should go based off of my theory, So I'll update you once we get significant movement on this trade. All right, so let's get into today's trade breakdown. So I took a trade on Euro AUD, and unfortunately I got stopped out and I lost about $5.2 thousand on this trade. Now I did say that I was going to show every single trade that I take, whether it's a win or a loss. So I'm gonna go ahead and show you guys, losses do happen. They do happen. So took this loss for 5.2 thousand on Euro AUD. Now I was in a 16 lot position. I recorded when I entered in on this trade. So you guys should be able to see that in the first part of this video. And you'll see that the analysis was correct. So for me, this is a win. Like, I'm really happy about the fact that I analyzed this market. The market, although there was a little situation here where it gapped up and got me stopped out, the market still did what I thought it was going to do, which means that my story of what was going to happen was correct. Now, what made me decide to take a sell in the first place? And then we'll get into the 3 reasons why I lost, which each one has something that you can learn from. So the first thing is, okay, the market's going bullish. We're forming consistent bullish market structure. And, at this point, when you're here, anywhere inside of this yellow square, you're thinking to yourself, okay, this market should continue to go higher unless something changes. Did something change? Yes, because the market right here formed a lower high. So if we mark that right here with an orange circle, we'll see the first sign that the market was starting to shift into a bearish structure. What confirmed that we were not bullish anymore and we were at least going to enter in a consolidation, it was this low down here. Now we're not bearish yet, but now at this point, I would stop looking for buys once the market reaches this area. I'm going to put a different color. Let's say this orange area right here. Once you see this, you can no longer look for buys or sells, because at this point, it's not either bearish or bullish. In order for it to go back bullish, it needs to start breaking above these 2 highs. In order for it to be bearish, it needs to break below these 2 lows. Until this happens, we are simply just ranging inside of this big area between 179,400 and 177,800. So until that happens, nothing happens. All right, let's continue and we'll see right here. This is the formation of a lower high. And then if you go down here all the way to the bottom, the most extreme low that the market made, that is a lower low. At that point, you can pretty much confirm it's a bearish market structure because you have one lower high, which is this one. This one is lower than this one. And now you have, or I guess at this point, you could consider this one to be the next lower high. At that point, this is a pretty bearish market. So technically, a sell right in this area that I'm going to put in blue, you could sell in this blue zone. That is a valid sell position. Actually, this one could even be considered a better sell than the one that I took. But yes, this one is a sell. We continue to go bearish, and then I'm going to explain now why I entered in my trade. So the reason why I entered in my trade is because I looked at these structure points, and then I saw this high as being a lower high for the continuation of the market going down. Now, the only thing that was not good about this trade, which does touch on number 2 here of my list of why this trade ended up losing, was because it was missing a lower low. The market came down off of this lower high, and it was supposed to break the previous low, but it didn't, and it actually ended up forming somewhat of a support right here. This is something that subtracted points from this trade. Now, if you fast forward in the future, you'll see that the market didn't care about that support at all, and it actually broke straight down following the overall trend in market structure. But in the moment, I didn't know that, so for me, that subtracted points. I was like, okay, that doesn't make it an A plus setup, which is why you see I only lost $5,000 and not 7 or 8,000 because I didn't risk as much. So that's number one. I guess at this point now I can just get into why I did lose this trade. Basically, I held this trade over the weekend. I took it on Thursday. I held it. Friday, nothing happened. Consolidation the entire time. So I'm like, you know what? I'm going to hold this trade. Sunday afternoon, I'm in Eastern time. When the market opens up, it opens up with a gap. Like by the time I check the chart, the price is already down here. So at first, when I saw the price, I was like, oh, we're good. We're good. This is no problem at all. We're at 177,840, or whatever. So we're chilling. But then I look at the chart, I see this and I'm like, oh, okay, let me check the broker. And of course, the broker did stop me out because at that time, at 5 p.m. Eastern time on a Sunday, the spread becomes massive. And it did unfortunately stop me out. I am a little bit, frustrated about it because it shouldn't have stopped me out. My stop loss was over 10 pips above where price was. I had my stop loss a little bit higher than what you see here on the screen. Here you see 206. I had it a little bit higher than that because I know how spread works. But unfortunately, the gap up was just a little bit too high and it got me stopped out. So I ended up losing $5,000 on this trade instead of making $12,000 or $13,000. So that was a big gap for me. Like, obviously I still feel it, but I understand. Look, I was right. I did it right. I can't really blame myself for anything, like I did the things right. So it is what it is. The market still played out. Like I said at the beginning of the video, I see this as a win. Now, the reasons why I do think this trade was a loss, because I still want to take accountability for my losses, even if I know it was kind of, BS. So first of all, I entered in late in the week. I entered in on a Thursday, right around here. That is a little bit later in the week. I think entering in on Thursday is perfectly fine. I've done it many times. However, it does slightly increase the chance of something like this happening. Number two is missing a lower high. The ideal circumstance would have been that the market came down further, forming a lower high before this pullback to then continue to go down. So not having that already makes it not be an A+ setup. For me, this was not an A+ setup. That's number two. I do think that did play into the fact of why I lost this trade, even though it ended up playing out perfectly. The third reason was because of the spread and the market gap. So you have to understand, every single time you hold a trade over the weekend, there is a risk that the gap up is going to completely stop you out. And if you look at GBP JPY right now, you'll see something pretty scary, because if you were in a sell position down here, this could have potentially blown your account. If you open up on Sunday, you see where the market is, it gapped up over the weekend, 200 pips. This probably would have blown any account or any funded account that you were trading. So definitely it is a risk, and you have to understand that and calculate it. There is ways to know when it's more likely than other times, especially with a big gap up like that, if there's fundamental things going on and stuff like that. But for Euro AUD, it wasn't that big of a gap up, but it was still big enough to unfortunately stop me out. So definitely learned a lot from this trade right here. And it's just the start of the week. Right now it's Monday night, and I'm very excited to see what the rest of the week has in store. So I'm going to be trying to do these trade breakdowns for every single one of my trades, showing both my wins and my losses. If you guys want to keep seeing more videos like this, make sure to drop in the comments and say, yes, make more trade breakdowns, and I'll keep making them. So I will see you in the next one, and I appreciate your time for watching this video.